Now, I think unless the economy goes to total that now through the rest of the fall, through the winter until about February next year is going to be about the best time to buy through at least the first half of 2023. I'll explain why in just a minute. If you have to sell now, go ahead and sell because there's still some strong buyers out there. But if you can wait until spring, I think that you will do a little bit better then. Welcome back to another episode of and I know that some real estate agents watch this. Don't try to use this name. The Data Over Drama Market Update is trademarked. All right, like normal, we'll talk real quick about some of the national numbers, and then we're going to get right into the market update for Winston-Salem, Greensboro, High Point, the entire Triad area. Today, when I'm recording this, the Fed decided to raise rates yet again, another 0.75%, making the current Fed funds rate the highest it's been since 2008. And I'm not going to spend a whole lot of time about this. I talked about that last month and risked extreme personal harm and sickness. But I do want to say when Jerome Powell was talking about this today, he indicated that he's going to take into account some of these lagging indicators that kind of like they were getting the message and, maybe they'll need to pause or slow down or something like that. They want to take in some of those other lagging indicators before they make their next announcement. That was really good news. The market really saw that right when he said it, like it was shortly after the 2 o'clock hour Eastern time. And if you saw the stocks, then the market really started to rally. It was expecting the increase. And when Jerome Powell said that, the market really started to rally. However, a couple minutes later into that same talk, he said the soft landing that he was hoping for is going to be a little bit more difficult than anticipated, and it might not happen at all. Got people a little bit jittery. They started giving back, the stock market started giving back some of those gains. Then he said that the Fed would rather overcorrect now and raise rates too much and then go back to doing what they did before, printing money to stimulate the economy, than risk not getting inflation under control by not raising rates enough. Well, that is not what the stock market wanted to hear. That is not what the bond market wanted to hear. They both kind of really took some big hits after that. They closed the day sharply down. And as we've talked about before, that's not always a direct correlation to mortgage interest rates, but typically when the bond market drops, mortgage rates go up. So we'll see how mortgage rates react the next few days after this announcement, but it did not sound too great. Again, I'm a real estate agent. What do I know? I told you how I felt about that last month, but wasn't a great idea. I would rather saw a back off, or even if we couldn't get that pause now, at least a slowdown to a 0.5 or something increase, something not so much foot on the floor, but we'll see what happens. All right, so let's take a look at the market update. Let's take a look at the real numbers that are going on right now in Winston-Salem, Greensboro, High Point, the surrounding area. We're going to take a look at the supply and demand numbers, the days on market. Now, this is an interesting one. It's going to be, I'll talk about it more at the end, but just to give you some perspective, I'm going to make some references back to pre-pandemic market in this video, and I just want you to start to see some of these correlations, how I think that this is starting to be a more normalized market. I just want to give you the information so you can make the best decision for you and your family. That's how the whole data over drama gag started. I just want to make it real simple without all these scary words and everything, just so we can all see what's going on so you can make the best decision. But days on market in 2018 and 2019, they ranged a lot, but they were like 18 to 35 days was the range. So 18 on the low and 35 on the high. We'll talk about them a little bit towards the end, but I just wanted to get that out, kind of what I'm seeing overall in the market. First, let's look at the total closed sales. We saw a sharp drop in total closed sales in October. I mean, they look like they fell off a cliff on the chart here. They're about half of the total closed sales that we had in October of a year ago. But take a look back, they almost match exactly the number of closed sales in the fall of 2015 through 2019. So again, I'm going to be making mention of this pre-pandemic levels that we're seeing on here, and that's kind of what we're seeing, a normalizing, stable market, back to kind of what we saw before. So, some real estate agents are going to be in for a rude awakening when they're, they've only been in this market for the last couple of years and just saw so many sales. It's going to be a different world when they see how things get back to kind of pre-pandemic levels. Now on that chart, I want you to notice one other thing. Our lows for the year tend to happen in about January or February. This means that if that holds true again this year, like it typically does, we're going to see even fewer sales over the rest of this fall and through the first part of the winter. That's why I said if you can wait to sell, that spring will probably be a better time, combined with seasonality and other things. I think that market will be just much stronger like it normally is during the springtime. But if you're buying right now, there's going to be a lot more homes to choose for that we'll talk about in just a second. In the market snapshot, real quick, we're going to see a little bit more space growing between the total number of listings and those going under contract. We saw, this is for the last 7 days, we saw 340 new listings come in the market and 288 listings go into due diligence period. So again, moving quick, but that number is starting to build. We're starting to see some separation there. Now on to the month supply. We saw another sharp increase in month supply. And actually, we've seen the highest amount of supply since we did in July of 2020. So that's nice to see. We're starting to see some more balance come into that sector of the market. But again, under 2 months, I mean, it's 1.8. That still favors sellers pretty strongly. I would love to see that get to about 3 months of supply to get towards a more balanced market. If you're seeing a trend here on the homes for sale, you're kind of see what I'm getting at when I'm talking about pre-pandemic levels. The number of homes for sale rose again to, not quite pre-pandemic levels, but summer of 2020 levels, which is refreshing to see these numbers really start to come back to where they should be, to where something a little bit more normal. If you remember, if you watched these earlier this year, I said, at the beginning of the year, I said, even if we triple the amount of listings that we have right now, the number of homes for sale, we would not be at 2019 numbers. Right now, we've more than doubled that since at the beginning of the year. So we're still, not where I'd like to see us at, but we're making progress towards much more inventory, more choice, and less chaotic mess for so many buyers. So good news, but still on the low side overall. Let's take a look at the new listings for October. This one's interesting. Now you see the red dashes on the bottom of this chart. This is where we normally see our lows for the year in new listings. We see those in December or January typically. And normally in October, if you look back where I have these, we'll see in a typical October, we'll see 24 to 2,600 new listings come on the market. Well, this October, we were under 2,000. We were at 1,977 new listings for the month of October, so sharply off of what is a normal market for new listings. So that tells me there is going to be far fewer new listings coming on the next 2 or 3 months, all right? We're gonna see fewer and fewer new homes coming on the market if that holds true through, December and January of 2023. Now that combined with the fact that new construction is not going to be ramping up anytime soon, we're not seeing any foreclosures come on the market. Maybe we will in the future, but we're not going to see those anytime soon. That points to still a short supply in 2023. All right, so that was the supply side of things. Let's take a look at the demand numbers. And remember, this takes into account about 2 or 3 weeks of data since that last big Fed rate increase. So it'll be interesting to see how things shake out this month after this next big one, but let's take a look at the demand numbers on how they were for October. What I can tell you overall that you're going to see from these is the desire for move-in ready homes is still pretty high. First one is the percent of list price. This remained flat right at 100%. So all of the scare headlines and clickbait and all these things that you see about price drops and all this stuff like that, of course we're seeing it sometimes, and of course we're not seeing the craziness like we did, in the spring of the last couple of years, in the summer of the last couple of years. But don't take that to mean that prices are falling or plummeting or anything like that, because as you see right here, they stayed right at 100%. Again, giving all the other things that we saw with increased inventory on the supply numbers that we just looked at. Average sales price. This is an interesting data over drama stat right here. This one actually went up this month. It tested that $300,000 kind of floor there, bounced off it, and went back up to $306,000. Interesting to see that, giving all the news and everything that we see going on, right? And with this number, I want to give just a little side note and a warning. Don't take too much into account on this in a month-over-month basis. It's good to get general idea of the direction of a market. And I know a lot of people really hype this number up, but the reality is you're not paying $6,000 more for the same house that you would have last month. That's not kind of how that number works. And when you see it drop 20% and everybody, or $20,000 and everybody freaks out and said, oh, you can, houses are now, they're dropping like this. That's not necessarily the case. Most people tend to shop on payments, right? So if the rate goes up and, payments go up, then maybe they're going to look at a smaller house, or maybe they're not going to look at such a new house. Maybe they'll look at some where they got to do a little bit of work to, or they're going to make adjustments, right, to make that thing fit their budget. So it's a good general indicator of where price is going over time. But honestly, people want to know about it. I'm not, the biggest fan of that number, just because it tells just a small part of the story. So you see all the news about, price drops and all this stuff like that. That just says, some people are still pricing their home incorrectly. And side rant, in a market that's changing, you can't just look at the sold comps from 30 and 45 days ago, or heaven forbid 6 months ago. It's not where we're at when you're doing that. You have to look at what's going on right now. That includes not just solds. You have to look at active, pending, those ones under contract, and those ones sold just in the last week to 2 weeks. You got to really get an idea of where the market's at to get a clear picture so you can price your home accordingly or make the correct offer. All right, side ran over. Let's move on to the final one, and that's days on market. You remember last month we saw that had been at 7 days or fewer for over 2 years. This month we finally popped out of that. We went to 8 days on market. And that's kind of a big deal, right? We made a new high that we haven't seen in a really long time. But let's just temper that just a little bit. Let's temper that just a little bit because it is, one, seasonality. Two, that market couldn't go on forever. It went on for over 2 years. Three, it was just 1 day. If it jumped up 2 or 3 days, that would have been something like, uh-oh, what's going on here? But for it to kind of creep up, hold and then step up a day, that's not that big of a deal. Remember at the beginning of this video when I said, just for some perspective, those numbers in 2018 and 2019, where we're at 8 right now, those range from 18 to 35 days. That was still a pretty strong seller's market. It was not, we've just been so conditioned over these last couple of years of what a crazy market is. It's hard to remember just kind of what almost normal is. So 8 days, nothing to panic about. If it starts moving quicker or taking multiple day jumps in 1 month, and that's something different. But right now, I just, again, points back to, we're heading back towards a pre-pandemic market, a little bit more normal. It's great news for buyers because you can still get stuff done. You can negotiate repairs. You can, not always have to compete with all these other offers. You can, a lot more options there, even though some things might not be in your favor, like rates and things like that. While still at the same time, sellers, if they price and show their house right, it's going to sell. So right now we're just pointing to just a more normalizing market. If you need help buying or selling real estate anywhere in the triad, I'd love to be a resource for you. You can email me directly at jeff@govalentino.com. Thanks.